Technology M&A was on fire in second quarter with total deal volume reaching $83 billion, stemming from 414 deals. There were 15 deals announced, topping $1 billion. Here with more is Joe Atkinson from PwC, who helped compile all of this data. So Joe, total deal value down 3% year over year, volume down 19% year over year, but the numbers I mentioned at the top were a sharp rebound from first quarter, largely driven by that landmark Microsoft LinkedIn deal, right?
Yeah, they're interesting numbers, Scott, and part of the thing that 414 deal count tells you relative to just 3% reduction in the deal value is bigger deals are happening in this space. And of course, you look at a few deals that were just mega deals, right? So we talk about deals of mega deal value that are $5 billion or above. You've got Microsoft LinkedIn, you got the acquisition of IMS Health, and then we also saw the CSC HP Enterprise deal. These are all deals that are driving that big increase in the deal value number, or the relatively big increase in the value of those individual deals.
Yeah, and that Microsoft LinkedIn deal at $26 billion. What was your reaction to that merger? That got a lot of headlines.
Well, I think when you look at all the transactions across the industry, what you're really seeing is people and clients and executives in those businesses, they're looking for access to markets and consumers, just like any growing business is looking for. And in the technology space, it's all about scale. We're looking for places where you can get more access to customers, you can acquire a technology that gives you some innovation, or you can drive some innovation that perhaps you couldn't create inside the company.
Well, it's interesting. The deal was announced on June 13th, and Microsoft stock is up almost 13% since then, but LinkedIn is largely flat, up about 0.3% since then. Now, we also had Brexit during the quarter, but that didn't exactly, impact deal volume, right?
It doesn't look like it. I think people are looking at Brexit and trying to figure out what it really means, and I think the market has already adjusted for the fact that implications from Brexit, while really, really profound in the moment, are actually from an economics perspective and a commerce perspective, probably a couple years out. So we'll have time to digest what Brexit's going to mean to this market.
All right, and going forward, what's your take on the tech M&A space for the rest of the year? Obviously, we just had that huge acquisition by Verizon of Yahoo.
Yep. There's a couple of other deals that have been announced, right? So the Verizon Yahoo, we saw the Oracle announcement of NetSuite. I think there's going to be more deals announced. And again, the drivers behind these deals persist. There's one other piece of the data that I thought was interesting, which was second quarter, we saw 6 IPOs. We hadn't seen that much IPO activity since the fourth quarter of the last year. In fact, we saw none in the first quarter of the year. So it suggests that the tech market is going to continue to heat up. It suggests that people are going to keep looking for the value.
But of course, we do have an election during the second half of this year, not something we had in the first half. Yeah. So how does that affect things?
Well, I think when you look in an election year generally, across all businesses and across all industries, elections create a certain degree of uncertainty. And when you have uncertainty in the executive suite, you tend to see a pause in the way executives make decisions on spending. And we saw a little bit of that in the GDP numbers that were released this morning. So I think it puts a little bit of a pause, but market value continues to stay strong. I think execs are going to navigate through it fine.
All right, Joe Atkinson, we'll be watching. Thank you so much for coming by.
Appreciate it. Thanks for having me, Scott.
I'm Scott Gamm, and you're watching The Street.